Today's top stories at NBR. A property manager announces the spin-off of its office properties. Economists remain bullish about the economy's resilience. DDoS attacks and more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Monday, September 13th. I'm Paul Brennan. Thanks again for joining us. The Financial Markets Authority says it carefully considered litigation, including an employment claim involving its new Chief Executive Samantha Barris, before appointing her to replace Rob Everett. It was reported last August that Barris reached an out-of-court settlement and withdrew an employment claim against the Gibraltar Government, Minister for Financial Services and the GFSC, and also faced an ongoing defamation case brought by a lawyer following media statements made by the Commission following the collapse of a company called Enterprise Insurance. The FMA, however, said it was both aware and had considered these matters, with the defamation suit seen as an occupational risk associated with high-profile regulatory roles. Property fund manager Stride has announced the spin-off of its office properties into a new fund dubbed Fabric Property, which will also raise $250 million to $290 million through an initial public offer. In a statement to the NZX, Stride said it had created Fabric as a subsidiary in November last year to invest in commercial office property, mainly in Auckland and Wellington. Fabric currently owns 10 such properties and has a conditional agreement to buy a property under development at 110 Carlton Gore Road in Auckland's Newmarket from Manson's CGR for $217.5 million. The property is due for completion in February 2023. Agricultural investment firm MyFarm Investments is seeking $15.2 million to buy land to launch a carbon credit generating investment fund. The Sequest Forestation and Carbon Investment Fund will put the capital towards buying up to 1,500 hectares of land to plant radiata pine. MyFarm's General Manager of Investments, Con Williams, joined the NBR's Andrew Bevan.
It's open to wholesale investors with a minimum investment of $50,000, and really it's about people that are interested in looking to address climate change, but also having an investment in that space that's going to benefit from rising carbon prices. And also anybody who's got an interest in forestry. It is a long-term investment, and we are targeting around forestry as well, being a big focus for the blocks. And so those are the two key elements in terms of the investment.
MyFarm General Manager of Investments, Con Williams, with Andrew Bevan there. A derivatives issuer has been ordered to pay a $770,000 penalty after admitting to multiple breaches of anti-money laundering legislation over more than 3 years involving close to $50 million. Auckland-based CLSA, which provides margin foreign exchange trading and other broking services, was accused by the FMA last June of multiple compliance failures and ordered to stop providing derivative services to retail customers. The company is owned by a Hong Kong-listed company of the same name via a subsidiary in the British Virgin Islands. It was formerly known as KVB Kunlun, New Zealand, and is licensed by the FMA as a derivatives issuer. The latest COVID-19 lockdown might put a dent in economic activity in the second half of this year, but economists remain bullish about the economy's resilience. The New Zealand Institute of Economic Research's latest consensus forecasts said the recent lockdown would reduce economic activity this year. However, the expectation is for a rebound in demand from 2022, it said. The consensus forecasts are picking annual average growth will remain at 4.5% for the year to March 2023. ANZ, ASB, Bank of New Zealand, Kiwi Bank, NZIER, the Reserve Bank, the Treasury and Westpac all responded to the NZIER's survey of economic forecasts, which it uses to produce the consensus forecasts. New Zealand companies are particularly vulnerable to the kind of DDoS attacks that appear to have affected the likes of Kiwi Bank, ANZ, NZ Post and the Met Service in recent days, according to a cybersecurity expert. A DDoS, or distributed denial of service attack, is a malicious attempt to disrupt the normal traffic of a targeted server, service or network by overwhelming the target or its surrounding infrastructure with a flood of internet traffic. While the government's cybersecurity watchdog, CertNZ, tweeted last Wednesday that it was aware of a DDoS attack targeting a number of New Zealand organisations, it has said little since then, and the entities reporting intermittent issues with their web-based properties have not explicitly mentioned DDoS or hacking. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, in this week's economics column, John McDermott looks at what a recession really is, while in Margin Call, Greg Fleming looks at sustainable infrastructure investment. I'm Paul Brennan. I look forward to being with you again tomorrow from around lunchtime for the morning's NBR trending stories. Then same time, same place, right here from around 5:30 tomorrow for another NBR Today.